Hello traders, and very welcome to this series of educational videos that FXCM has for you. My name is David Rondonio. I'm a trader and a market analyst, and today's video is about a very important subject for us as traders and investors. We're going to be talking about the impact of central bank policies and how they practically move the entire market. So let's start with the interest rates. Right? So the central banks like the Federal Reserve in the United States use interest rates to control borrowing costs. Lower rates encourage borrowing and spending, stimulating economic activity, while higher rates can cool down an overheating economy. So there we have like the first key point of how the economy will move according to the interest rates of the central bank. Second, we have the monetary policy tools. The central banks employ various tools, including open market operations, reserve requirements, and quantitative easing to implement monetary policy and manage money supply as well of each country or of each currency. Then we have the inflation targeting, very important as well. So many central banks have an inflation target. So they adjust policies to keep inflation within a specific range, and that's aiming for price stability to foster economic growth. Then we have the currency values. The central bank actions influence currency values. So, for instance, lowering interest rates may lead to a weaker currency, boosting exports but potentially causing inflation. So that's why the central bank or the Federal Reserve in the United States news moves the price so drastically and dramatically when they change the interest rates or they have news about the economics. So the currency values moves very volatile. Then we have the financial markets. Of course, the central bank decisions impact the financial markets. So changes, as I was telling you just before, the interest rates or unconventional policies can affect stock prices, bond yields, and other asset classes. We also have a video here on the channel about the bonds, the T-bonds, very important subject as well. So I recommend you to check on that video and understand how the treasury bonds also impact the markets. Then we have the employment goals. The central banks often have mandates to promote full employment. By influencing the economic conditions, they aim to create an environment conducive to job creations. Then we have the global, this is also important to understand, and not just important, but a key point, that the global interconnectedness. The central bank policies is in one country can have spillover effects globally. So actions in major economies like the US or the Eurozone can impact international trade and financial stability. And then we have the forward guidance. At the end, the central banks provide guidance on their future policy intentions. So the clarity of this guidance can influence market expectations and investors' behavior. So I was telling you at the beginning, understanding the intricacies of central bank policies, it's very crucial for investors, businesses, and policymakers alike, as these policies shape the broader economic landscape overall. So if you like this kind of videos, don't forget to share and subscribe, and also wanted to guide you to our FXCM platform, where you can always have the insight articles and the most recent news about the central bank's policies, strategies, central bank decisions, etc. So also don't forget to click on the like button, and I will see you guys on the next video. I'll see you on the next training session.